Welcome, ladies and gentlemen, to Commodity TV and a new online interview episode now with Sibanye-Stillwater because they released their numbers and we want to talk with James Wellstead. James, good morning to South Africa. How are you?
Morning, Jochen. I'm well, thank you, considering the circumstances.
Yes.
But good, thank you.
That's right. Super. Okay. Yeah, I'm just back from PDAC. That was really a great thing. And yeah, of course, you guys had to do some other stuff. That's why we couldn't meet there. That's why we are doing now also the interview. I'm a shareholder of the company. I want to disclose that. And of course, I was not so happy on the numbers, as I can imagine you were also not so happy. So let's get into discussion here. Let's get into detail. What was your impression overall?
Well, I mean, it's been a very challenging year for us. We started the year relatively okay. I mean, as you're aware, we produce platinum group metals, gold at the moment, and then we're developing some lithium projects. And most of our earnings come from or have come from platinum group metals in the last couple of years, over 80% of our earnings. And what we saw last year was a total collapse in the platinum group metals prices after China opened up. And it was really driven by destocking of inventory that had built up over the last 3 years since the beginning of COVID. I think the fabricators and OEMs, the auto manufacturers, were concerned about supply disruption from COVID, various factors in South Africa, and then obviously the conflict in Ukraine impacting on supply. So they were taking on a lot of metal and keeping a lot of inventory, which then last year they destocked or started to sell into the market. And that really meant that prices were significantly lower. So for us, for our received prices for on a PGM basis were, substantially lower, almost over $1,000 per ounce lower, which meant that our profitability dropped significantly. So whereas last year we generated profit for 2022 of $1.2 billion, this year that has now dropped to a $2 billion loss. It does include significant impairments that we made to some of the values of some of the operations, and that's largely a result of the lower prices as well. We have to revalue those assets given the current circumstances, and that resulted in significant impairments for the period.
Okay, so those impairments are non-cash tangible, right?
Yes,
So
they non-cash and
yeah.
almost non-repeating.
Hmm.
So we've done a substantial impairment of many of our assets. So we shouldn't have that repeating again.
Okay, so it sounds to me a little bit that you have packed a lot of bad things into that balance sheet. I hope so, at least. Is this the case?
Yeah, listen, I mean, it's been a very challenging year, as I said, and the last half particularly was very difficult,
Hmm.
with PGM prices continuing to decline. So there's a lot of bad news in the current result. We are a little bit more positive about the outlook than some of our peers and some people in the market. But certainly it's going to be quite a challenging year ahead, at least. And we need to manage our business in a way that we don't put further stress on our balance sheet going forward.
Yeah, yeah, absolutely. No, I mean, also from the strike side, it should be quiet because you have done a multi-year agreement, so that should be also fine for this year, right? And it looks to me like also that the South African, let's say, gold business is also coming better and better with the feet on the ground, right?
Yes, so we have got gold negotiations starting again this year in July. But again, as you say, we've recently signed 5-year agreements at the platinum or PGM
Mm-hmm.
operations, and one we did at our Kurendal operation last year, which is a very positive sign. And I think in the current environment, it would be highly, unusual for
Hmm.
us to get into any industrial action at these operations at this
Hmm.
point. And
Okay.
so we have had a period where we've had more stable production or operations. and with the higher gold price, and now gold price being at record levels, there's been quite a substantial turnaround in
Hmm.
the performance of our gold operations. So a year ago, in 2022, they posted a adjusted EBITDA loss of $220 million,
Hmm.
and this year it's 100, or in 2023 it was positive $193 million.
Hmm.
So we're looking forward to even stronger performance this year, assuming that operations are relatively stable.
Hmm. Okay, super. Let's stay a little bit further in South Africa, because okay, the gold business is fine. So I got several questions that during PDAC from shareholders. And what is going on with the uranium option there? Because I think this is something which really would be fantastic for the future, right? And you have 60 to 80 million pounds sitting there in tailings at $100 per pound uranium. That looks to me attractive.
Yeah, it certainly is. I mean, the uranium outlook looks very, very positive at the moment. We do, as you say, we've got quite substantial uranium resources, and a lot of them are on surface, actually. Uranium was mined as a byproduct of gold. And
Mm,
when they stopped processing uranium in South Africa in the 1980s, a lot of that uranium was deposited on some of the dumps, and we own one of the richest dumps. So we've got about 59 million pounds of
mhm,
uranium resources. Some of it on that dump, as I said, about 33 million pounds, and then some of it underground in a mine called Biza, which we are looking at how the best way to unlock the value
mhm,
from those uranium assets. So we are exploring various options. I'm not sure we want to develop a processing plant, etc., and do it ourselves, but we are certainly looking with partnering with others. Or looking at other ways to unlock the value in this positive price environment.
mhm. Okay, super. Yeah, because even if you would do it with a third party, if you could, let's say, release a net of $30 to $40 per pound, that would be a significant amount of money coming to the company.
Yeah, and I mean they get no value attached to them at the
Exactly.
moment by the market or by the analysts. So it would definitely be a very positive outcome. Yeah.
Mhm. Okay, super. Um, Another question to South Africa. You said you will lay off approximately 4,000 to 4,100 workers. Yeah, that's one thing. On the other hand, what else are you doing? Because I saw that you are very heavy in renewable energy, and by 2027, there should be a fantastic contribution here to your power needs. I think it's like 20-30%. No, not sorry, not 20-30%. Approximately 30% of the supply you need, you can generate by your own at at much lower costs, right? So this all together would really start, let's say, this year and for the next years, would help with the margins in South Africa, right?
Yeah, that's right. So, I mean, first of all, we are developing renewable energy
Mm,
projects. As you know, one of the biggest constraints and one of the biggest cost drivers in South Africa over the last decade or more has been the power utility Eskom, which is the state utility that has up till now had a monopoly on generation and
mhm,
distribution of electricity in the country. And recently, they have now lifted the caps and allowed private partnerships to develop renewable energy projects, because we really are in a position where we need additional sources of energy. So we one of the leading companies or private companies that is leading this renewable energy process. We've already got 260 megawatts of solar and wind projects
mhm,
under construction. And by 2026, we expect to have over 600 megawatts, which is substantial, of renewable energy.
mhm,
It won't for, cover all of our needs, because we do need that base load supply from Eskom, but
Hmm.
it'll certainly have a significant impact on our costs and obviously on our carbon footprint.
Hmm.
It'll make a significant benefit.
Hmm. Why wouldn't you build an SMR for your baseload needs by yourself and then power it with your own uranium?
Well, yeah, listen, uh, if I'm not sure what the regulatory constraints on
Okay.
running a nuclear reactor would be, but I mean, at the moment, given our financial position,
Mm,
that would be quite a big stretch. We're busy trying to finance, as you said, our battery lithium project in
mhm,
Finland. That's got relatively high capital requirements over the next 2 years, but we believe that by developing it now and continuing to invest in that project, we'll be able to deliver into what we think is going to be a deficit market for lithium and higher prices related to that as this continued growth in BEV globally, creates more demand for these
mhm.
battery metals.
Mhm. Okay. Yeah, I mean, the lithium market has a surplus by now. Yeah, we will see where that goes. But it is quite funny because on the one hand, the lithium market is in a bit in the surplus because there are less than expected battery metals
Yes.
no, EV grows. But on the other hand, when you sell more combustion engines, because the overall market has grown, you sell more platinum and palladium for the catalysts, right?
That's right. And I mean, that's been our view, all along, and that hasn't changed. And I think what we saw last year was a lot of people in the market and even our peers, suddenly became very, very negative on the outlook and have almost capitulated on the outlook for PGMs, because of the low prices and that uncertainty about what's going to cause the market or drive the market recovery. But we've had a very consistent view.
Hmm.
We think we understand that the electric drivetrain is going to become a bigger part of the auto sector going forward.
Hmm.
It's inevitable, but we've never ever believed that the penetration rates that are being forecast by a lot of analysts are achievable, just
Hmm.
because you can't develop enough mines to supply all of that implied lithium and nickel,
Hmm.
etc. demand. What's happened recently, though, is obviously with the slowdown in global growth, and also with China after a very aggressive subsidies for battery electric vehicles in 2022, there was an increased expectation for continued growth at that sort of rate in battery electric vehicles. But what we've seen is it's actually slowed substantially, and people are
Hmm.
actually preferring at the moment hybrids. And hybrids obviously have a battery, and they also have a
Hmm.
internal combustion engine.
Yeah.
So it
For
benefits
you,
us
the
from the
best
battery
business.
side
Yeah.
and from the PGM side. So
Yeah.
our view is that there will be a deficit in lithium and other battery metals
Mm,
in from 2026 onwards, and the battery penetration rate or BV penetration rate will have to be slower until supply catches up with demand, and in that time,
mhm,
PGMs are going to have to fill that gap. So
mhm,
there's a very positive story on both sides
mhm.
from our perspective.
Yeah, absolutely. I see it the same way. Um, let's come to Caliber because we touched on it already. So, what's the status with the construction? I hope all is going well. First question. Second question. Do you face any more, let's say, any cost overruns? And what is the key component to me is what do you think will be the estimated AISC per ton of lithium?
So, I mean, Kiliber's on track. The refinery we started last year, and that's well under construction. We also got permit approval last year for the Rapasari mine and the concentrator,
Mhm,
which have been approved, and that concentrator is also under construction, basically. We recently heard from a court in Finland, though there was an appeal against some of the permits that were granted, and the permit on the Rapasari mine has been sent back for review. So there may be a bit of a delay in that mine, which is the second mine that we'll bring into production to supply our concentrator and refinery. But we'll still be able to start the project with the first mine, which has been approved. So it looks fine. I mean, we are obviously reviewing the potential impact if the second mine is delayed any further than what we expect, and we'll then just see what the impact on the total project is. But for now, it's all it's going very, very well.
Okay, super. Let's move shortly to France,
Oh,
to
sorry,
Son.
and you said the
Yeah,
costs. The costs will
yeah,
be
exactly.
in the order of about just over between seven and seven and a half thousand. Sorry, seven and a half thousand dollars per ton,
Hmm.
and currently the price is at about 12 or 13. So even at this low price environment, it will
Hmm.
be profitable.
That's the important thing, making money at least. Okay, let's move shortly to France, to Saint-Deauville, your nickel refinery. What is the business they're doing? It looked to me like a little bit better, but still not satisfying, right?
Yeah, we have seen a bit of an improvement in the performance in the second half. We did quite a bit of maintenance in the first half, which has
Hmm.
improved the consistency of the plant operating. But to be honest, there's been a significant structural change in the nickel market,
Hmm.
linked to obviously the new technology that the Chinese are using to process nickel laterites in Indonesia, and
Hmm.
that's resulted in a significant increase of new nickel material from Indonesia, low cost material, which has disrupted that market. So, Sandouville in its current form is unlikely to be profitable, given the change in the market dynamics. But we never bought it for the nickel facility, the nickel metal and salts processing. We actually always wanted to convert that into battery metal
Hmm.
production that we could supply into the European ecosystem. And we're currently looking at or going into a pre-feasibility on producing what they call PCAM, or precursor cathode active material, which is a
Hmm.
step beyond the nickel sulfate that we were looking at, and it'll take us up the value chain in the battery metal space, and that looks very exciting. But given the environment we're in, we need to address losses at Sandouville as well.
Hmm.
So we are assessing various options there, and engaging with stakeholders about what we can do
Hmm.
to address losses.
Okay. Then let us shortly switch to zinc, to your Century operation in Australia. It looks like that this is yeah, also slightly improving. By the year ended, you did like 76,000 tons of zinc there. This is almost three times more than like it was reported in June 2023.
Yes.
So that is also fine. What are plans there? How is it going there for the future?
So that operation we bought 100% in February,
Mm-hmm.
March last year. So the first half, first of all, doesn't reflect a full 6 months of production. That's attributable to us. But they were also impacted by extreme weather events, which caused extensive flooding in the Queensland region, and impacted production at that facility. So they did recover quite nicely by year end, and were actually profitable towards the end of the year. So we expect, if they can deliver according to the current plan, they should also be profitable. But I think for us, the other exciting aspect of that acquisition was the Mount Lyell. There was an option to acquire Mount Lyell, which is a copper mine in
Hmm.
Tanzania. It was suspended a decade or so ago. It was owned by um, Vedanta, and we exercised that option, and we've now owned the Mount Lyell mine, and we're busy with a feasibility study looking at the potential to reopen that, and that would obviously be our first pure kind of copper play or operation, which we see a lot of upside for copper. As you know, we were also bidding for Mopani,
Hmm.
which is in Zambia, but
Hmm.
unfortunately, we weren't successful with that
Hmm.
transaction. But copper is certainly one of the metals we favor.
Yeah, definitely. I mean, what said Robert Friedland said, I think for the next 10 to 20 years, we need more copper than which was produced the last 100 years, right?
Yeah.
So
Yeah. Listen, I mean, the
should come
shift
from
to
somewhere.
the shift
Yeah.
to the clean energy and
Mm,
requires a lot more metal. It's more metal intense on
mm,
certain metals than our previous energy generation.
yeah, absolutely. Last but not least, question, a really important one for us shareholders. We saw a zero final dividend. Let's say a reason for it was probably the loss, because I think you have a fixed dividend policy. So for the future, when you restart with the profits, we see again a dividend, right?
Yes, it was unfortunate, but as you say, I mean, our policy is a dividend of 25 to 35% of
Mm,
normalized earnings. And given, the circumstances in the second half of the year, I mean, we did pay a dividend in the first 6 months because we were profitable then, prices were higher.
mhm,
But in the second half of the year, with the decline in lithium and more PGM prices, we were in a loss making situation, so unable to declare a dividend.
mhm,
This year we'll see how it progresses. Certainly at current basket prices, we're probably going to generate another loss for the
mhm,
first 6 months of the year at least.
mhm.
But let's see how things unfold. I mean, we saw a
Develop.
nice little increase in the palladium price a couple of days ago, which is positive as well.
Mhm. Okay, but that leads also to another question, which just comes to my mind, because you placed a $500 million convertible some months ago, and also what is, let's say, the overall debt situation in relation then to your cash you have.
Yeah, so you're right. We did issue a convertible, and that was related to the Reldan acquisition. We acquired a company in the US. It's a big recycler
Mhm,
of basically electronic waste, so cell phones and iPads, etc. And it recovers a lot of gold. 160 odd thousand ounces of gold a year, silver,
mhm,
some PGMs, nickel, copper as well. So we raised that because we didn't want to further impact our existing balance sheet. We've ring fenced that really to ensure the sustainability of our operations and to fund our projects. So we raise. If we do M&A, what we've said is we'll have to
mhm,
fund the M&A through additional sources of capital. So we've currently got gross debt of it's in rand. Sorry, I don't have the dollar value, but 37 billion rand and
mhm,
cash of about 26 billion rand. So effectively net debt of 12 billion rand, and we're sitting at a relatively comfortable net debt to adjusted EBITDA of about 0.58, which is significantly lower than our covenant ceiling of 2.5 times.
mhm. Okay, perfect. So that means things are in good shape, I would say, in that sense that you are on a much better path. What I really like is that you also went into copper and recycling now. I mean, that is
Yes,
a
so
great idea, right?
So recycling, we already had exposure to through our PGM recycling business in the US,
Mm,
but we see that as important part of future supply, secondary supply of these metals. As I said, it's becoming more and more difficult to permit and develop new
mhm,
mines due to environmental and social issues and constraints. So we think that recycling and reprocessing of tailings, which is what we do in Australia with New Century and also DRD Gold,
mhm,
where it recovers gold from legacy or old tailings dams and then deposits those in a more environmentally friendly manner. So you're not only
mm,
recovering value, but you're also reducing future liabilities and improving the
yeah,
overall environment. So
yeah.
it's a very positive part of the business that we are growing, and we think in time, we believe that there will be premiums that will be paid for these types of metals, which
Mhm,
have got a much lower carbon footprint, a
mhm,
much lower impact on the environment, and a lower social impact. And
mhm,
and uh, 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 people will, we believe, pay a premium for
mhm.
these types of metals.
Yeah, absolutely. Yeah, and the good thing is you must not drill to replace reserves or resource, because you are recycling. It comes anyhow to you.
Exactly. Yes.
Okay, super. Hey, James, thank you very much. It was almost half an hour. I know it's quite long, but we had to discuss that more in detail. Thanks for your valued time. And I think things can only get better, and really keep fingers crossed that platinum palladium prices rise a little bit further. It looks to me like in my charts that the worst is done, that they really will go at least 20 to 30% higher, which would help you guys also. And I think you are in the progress of doing your homework, right?
Well, I think, and that's something we probably didn't touch on, but we are taking very proactive and decisive steps to
Mm,
try and address losses and take out loss-making production. So, we've already done 3 restructurings
mm,
in South Africa at our PGM and gold operations, and in America at our PGM operation, and we've already released, got benefits of about 6.6 billion rand
mm,
from those actions, which will make quite a big difference going forward. And we still think that there are
mm.
more levers to pull, and we will be pulling those levers. So I can assure you, we taking every step we can to try and ensure that the balance sheet is strong through this low period in the market.
Mhm. Okay, super. James, thank you very much. We talk hopefully quite soon and see us hopefully one day in person again. A long time
Yes.
ago. And I wish you well. And I would say just keep it going and surprise us positively.
Thank you, Jochen.
Super,
Appreciate it.
thank you. Yeah, ladies and gentlemen, that was James Wellstead, the Senior Vice President of Investor Relations, Sibanye-Stillwater. Well, you heard it. A lot of trouble in the balance sheet, I would call it, which they had to do a $2.57 billion impairment charge also. But it looks to me like that really most of the tough numbers are now included in that balance sheet from last year. And I think Sibanye is on a great path for the future because don't forget, it is gold, it is platinum, palladium. They go into copper in the future. They will be soon with lithium, and also they have rhodium, they have chromium, they sell osmium. So those are all those kind of metals we need for the future. And I think with the recycling business on top, this is something which is outstanding in the company. And don't forget also on nickel with Saint-Will, where there will be then also in the future a battery recycling company. And I think this is great, especially at those share prices. You really should have a look on the company because they are really on sale now, those prices. And it looks to me in our charts also that we have reached the bottom here. And our price targets are approximately 100 to 150% higher than today's prices for the short term, meaning 12 to next 18 months. And I think they will come back latest next year to profitability. That means also the dividend payments should restart again. So check it out. Thanks for watching us, and bye bye from Switzerland.